think this is good. All right, guys, good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking the time out of your day to join me. It is April 18th on a Monday, 2022. I think I said that backwards. It's a Monday, April 18th, 2022. All right, let's get to the market, shall we? Dow closed down pretty flat, down 0.11%. NASDAQ down 0.14%. And the S&P kind of flat today, down 0.02%. The VIX was down 2.33%. SPY, the ETF itself, was actually green. Qs were actually green, the ETF as well. Equal weight S&P fared a little less than SPY, down 0.21%. Small caps did take the brunt, were the biggest laggard of today's session in terms of the indexes, down 0.67%. The dollar index rose 0.47%. 100.79 is where we are. Let's go ahead and take a look at the dollar together, because that was something that I really wanted to take a look at with you guys. Is that the dollar is really moving in a sense with yields. And I know I always talk about yields, but look at the highs we had. This was back during the panic of the COVID collapse in 2020. So again, 102.97 is a big level. I mean, we're about to break 101. So again, this is saying, you know, dollars, monetary policy is tightening. That's saying all we need to know about that. But commodities are not really hurt, interesting enough. Look at gold today, up 0.36%, rejected that 2000 level. Silver up 1.34% today. But take a look at crude, up 0.60 today. Crude oil, we could take a look here on the daily. Again, with our Fibonacci levels, you could see 105.51, kind of your first support, and then you have 104.28 as your secondary support. But energy actually performed very well today, or actually performed pretty well today in terms of the S&P groups. Let's take a look at the 10-year yields. 10-year yields did soar, but the actual yield curve is widening. So there actually is a curve. We inverted slightly below twos in terms of the interest rate, but now it's at 2.868. So again, we're getting the spreads a little wider. That's a good sign. We want that. But again, interest rates continue to climb higher. So we're going to go ahead and take a look at this chart here. And what do you see that's pretty interesting here, right? The dollar and yields, right? Well, we haven't had high yields really since COVID. COVID, in a sense, in terms of kind of a longer timeline base, look at that. We hit the lows on the TNX, which is a 10-year yield. But again, that was right around 2020. We had a spike down in 2019. But 2020, you could see that during that COVID level where bonds were being bought. So again, all this is telling you is that our bonds are being bought, but now they're being sold. So again, the first level we're really looking for is 3.039. Really, the highest we may even go is 3.247. But again, look at the names that are very sensitive to yields. Tech is extremely sensitive. Higher yields mean higher cost of borrowing. So again, what's going to work in this environment with higher yields and higher inflation? Again, if we have peaked, maybe we roll over here. We get bonds come back down a little bit. Barclays had a trade on that, on the 10-year treasury. They were buying bonds, but now they got out of that. I retweeted that. But for the most part, you're taking a look at defensive names, consumer staples, utilities, dividend stocks. Healthcare has done well. But again, this is not a good thing for growth right now. Again, we need yields to reject here. We need bonds to be bought so we can have rates be a little lower. So what is the main thing? Again, if you're a fundamental trader, is really you're really just trading based on inflation data. Is inflation going to get worse? Did we peak? And if you're a technical trader looking at S&P today, you're seeing that 50-day moving average is still being rejected. Again, look at this straight line here. You got your downward channel here. And again, yes, you can see kind of an inverse head and shoulders. But we could also tap 43.50 and then bounce. But again, until you break above the 50-day, which is 44.12, there's not really much meaningful to do in terms of being long. But again, short-term short. So I am short on futures, and I also have some SPY puts. So again, my target here is right around 43.55, 43.50 or so. So we should be able to see what happens overnight as we go along. But again, really, it is a trader's market, guys. It's kind of frustrating out there. We're getting a lot of rotation. We dipped, we soared, we dipped, we soared today. NVIDIA had a nice day today. Tesla had a great day today, up nearly 2%, outperforming the NASDAQ. They report this week. Netflix reports this week. Bank of America had a great call. BNY Mellon, not so much, but I think they were up today. I think that's BK. BNY Mellon, they were down 2.28% as comparison to Bank of America, which had a great day, up 3.41%. We also hit Citibank calls today with the team. So Not many questions today. I completely understand. Not tons of going on in terms of economic data either. I explained this on the Instagram post. I went ahead and typed that out for you guys if you guys like to read it. I also did a couple of TikTok videos. I know I'm still getting used to that. Twitter. Take a look at Twitter after hours. They are up. We have the 50 calls in terms of unusual options activity, UOA, and you can see why. 38,000 involved for those 50s for this week. Maybe we get some news. We did get some news in terms of Twitter. Apollo reportedly considering participating in bid for Twitter, may support Elon Musk's deal or another bid. So that's from Twitter themselves, evaluating potential cooperation between Twitter and Yahoo. So again, maybe the price of Twitter does continue to go higher. I did an actual TikTok on it, and the levels we're looking for here, guys, is really 5120, which is your 200-day moving average. You could see it here, 5120, right in that red line. That's the target I'm looking for. We can probably get as high as 5290, but I think 5120 gets tapped, more than likely rejected. We still have a downward gap to fill too. So again, I'm not in a rush to buy this stock. Again, I've never really owned Twitter. I like using it, but I think Facebook is a better play in terms of fundamentals. That's just my 2 cents on it. All right, so not many questions today. We'll go and leave it there. Have a great rest of your afternoon. I'll catch you guys tomorrow for the morning note at 9 a.m. Eastern Standard Time. One quick thing, I do have jury duty tomorrow, so that's at 1 p.m. So I don't know if I'm going to make it for the aftermarket recap. I hope I do. If anything changes, I'll let you guys know, as always. And it was a great trading day. I mean, depends on how you trade it, sure. We'll go and leave it there, guys. We'll have a good one, and we'll catch you guys tomorrow. Cheers.